wouldn't mind sharing in the chat, just to make sure that everything's up and running. I know Cortez says that they're looking or they're having some trouble. If you wouldn't mind just letting me know that you can see the blue screen here that I'm sharing that says getting started with options trading using algorithms. Just want to make sure that we have everything up and running, and then we can go ahead and get started as everyone else is trickling in. Cortez says works now. Thanks. Perfect. Awesome. Glad we're all on the same page now. Alrighty, so I'm going to go ahead and share some information on options trading, give a little background, get acquainted with everybody, and get started. So Yolanda says, able to share the screen. Perfect. How are you this evening? I'm doing great. Really enjoying the first couple weeks of the new year. Been very busy, slammed with everything going on, which is always a blessing. So I hope the same for all of you. So let's go ahead and get started. Just to go over the agenda before we do jump into everything. First, want to get acquainted with you guys, learn who's on call, learn a little bit about you guys. Then I will give an introduction to myself and LumiWealth. Then we will go over some info in details on algorithmic options trading, and then I'll give you a demo on it, just so everybody can kind of get an idea of how this looks when it's all up and running. Then we'll go through the details of the course that we're going to be starting up here towards the end of February, so coming up here in about a month. Which is very exciting, and then we'll leave some time for any additional questions. Now, that being said, as we go through everything, feel free to chime in the chat. I'll be kind of monitoring the chat here, keeping an eye on it. If you have any questions that come up, feel free to ask and share any thoughts as we go through everything. It's always a little more fun when I'm able to have a conversation with you guys and get some feedback as we go to kind of tailor this to what everybody is looking for, and continue that way. So first off, let's go ahead and see who's on the call. So if you guys wouldn't mind just writing out in the chat, first off, what is your occupation? What do you do for a living? And then secondly, do you know how to program? And if you do, just maybe let me know what coding languages you know how to program in. That'll give me a good idea of everyone's experience on the coding front. And then also let me know if you have any investment or trading experience, and if you do, how many years of that do you have? That would be helpful for me. It'd be fun to kind of see who's on the call here and get familiarized with each other here. So I'll give everyone a second to type that out, and while you guys do so, I'll go ahead and answer these myself. So what is my occupation? My occupation is I'm a full-time stock trader and also a freelance algo trading developer. So I do a lot of consulting and development work for a variety of hedge funds and retail traders to automate, backtest, and optimize trading strategies, and specifically algorithmic trading strategies. So I'm excited to share some of that experience with you guys here today on the webinar, and then even in more so depth when we start up the full course coming up here in February. Then how much investment experience do I have? About 6.5 years of trading experience. Been doing that for a little while, and enjoy it. As anyone who trades knows, ups and downs when it comes to trading and investing, but I love it nonetheless. So Cortez says they're a trader. Yes, a little, and 8 years. Awesome. Yolanda says, same here, tax and investment refund season. Yep. Getting to that point, it's getting time to tie together all of the tax info and report that to the good old government. So yeah, awesome. So I'll leave another second or two here for anyone else to just chime in. Like I said, let me know what your occupation is, how much programming experience you have, if any, and if so, what languages you know how to develop in, and then also how much investment experience that you have, if you have any. So just give a second here for anyone else to chime in, and let's see what we got going here. So. Okay, awesome. So let's go ahead and move on. I'm going to give a little brief introduction first on myself, and then Lumi Wealth, and give you some ways that we can kind of go through communicating. You guys can get some more content as well. And I see Yolanda just mentioned programming languages include C++, Python, Java. Awesome. So it looks like you have a good amount of experience in there, and in a good range. C++ is great for high frequency trading if you're interested in that at all. Otherwise, Python is more typically used in data analysis and automation of trading if it's not relying quite as much on speed of execution. So that's great that you have both of those. And then Emil says IT is their profession. Yes, easy language, awesome. So familiar with that. Learning Python, great. Python is a great language to learn. So many ways you can take advantage of it and use it. And then 12 plus years of investing, amazing, even more than me. And then recently futures algo trading, awesome. So futures algo trading, very exciting. We're going to go through options trading. So as you probably know, there are options that are tied to futures trading. So if you're more so interested in futures trading, learn a little bit about how to take advantage of options that are tied to futures assets. So very exciting. So who am I? Gave a brief background in answering the question just a second ago. But again, just to reiterate, I'm a full-time algorithmic trader and algorithmic trading developer. I do a lot of consulting work and development work for a wide variety of hedge funds, retail traders, and different financial institutions. So what is Lumi Wealth? Lumi Wealth is a company that offers algorithmic trading courses and education. So that's obviously what we're here to do today, is give you guys some information, kind of a brief start with algorithmic trading with options specifically. But Lumi Wealth has a wide variety of algorithmic trading courses, ranging from just standard algorithmic trading to machine learning, and so on and so forth. So you can check that out on the Lumi Wealth website and learn more in detail. Also, if you want to subscribe and follow us on YouTube, you can do a quick search for Lumi Wealth. You'll find webinars like this and a lot of free and informative content on the YouTube page there. So go ahead and check us out on YouTube if you're itching for more content. Once we get off of here, great way to find that. Also check out our Discord channel. You can just follow that link that I have posted there. That is a great way to connect with other people who are taking Lumi Wealth's courses, and also just interested overall in algorithmic trading. Kind of a good way to meet people who are doing similar things. So Yolanda says, also currently learning how to invest in options, Forex, and crypto trading. Amazing. So this should be very helpful for you today. Hamal says, objective is to learn selling options and hedge with futures or vice versa. Perfect. Yeah, I'm gonna touch on that here in a little bit. Actually, options are a phenomenal way to hedge, and we'll go in that in a little bit of detail here. And then again, feel free to ask questions throughout the presentation. I have some things lined up that we're going to go over, but if I maybe miss something, or something I say isn't quite as clear, and you want some clarification around something, please ask, and just shoot a message in the chat there and ask a question. Interactive presentations are always the best, so definitely prefer to communicate with you guys and discuss with you guys rather than just talking directly to you. So move on to algorithmic options trading. So give you kind of a brief breakdown on some of the big hedge funds that are making billions and billions of dollars doing exactly this. Probably most noteworthy is Renaissance Technologies. If you've looked into hedge funds that run algorithmic trading, you've definitely heard of Renaissance Technologies. It's run by Jim Simons, and they have probably been arguably the most successful hedge fund of all time. So they manage about $110 billion in assets, might be a little bit more than that now, but they have returned an average annual return of about 39% over the last 30 years. And that's obviously uncorrelated with stock markets. So 39% average, just to put that into perspective, if you had invested that into the stock market with $1,000 over the course of 30 years, you would have returned $17,449. So, from just $1,000, not a bad return. But if you invested that with Renaissance Technologies and their trading algorithms, that $1,000 would have turned into over 19.5 million over the course of 30 years. So, obviously a huge discrepancy between the two, and that should give you an idea of the upside with algorithmic trading and algorithmic trading with options as well, and some of the opportunities that open up there. So, incredible returns that this hedge fund Renaissance Technologies has been able to achieve. If you want to learn more about it, there's an interesting book called "The Man Who Solved the Market Revolution." It's a book on Jim Simons and Renaissance. They briefly come over some of the tactics. Obviously, they don't share their secrets by any means, but they kind of touch on how they go about it, their personnel that they have working on everything, and the research that they do, and really quite fascinating. Obviously, the success that they've had managing over 100 billion in assets. Their revenue is probably well over $1 billion a year. To learn anything from them is obviously of tremendous value. So if you want to check out that book, there's a link for it. You can find it on Amazon, or just a quick Google search for "Man Who Solved Market Revolution." Some other firms, Two Sigma, very well known. They manage over $60 billion in assets. They are mainly a quantitative algorithmic trading hedge fund. Citadel is another big name, managing over $30 billion in assets. Their founder and CEO, Ken Griffin, is pretty noteworthy. Been in the news quite a bit. He was caught up in some of the issues with the GameStop trading and his strings that he was pulling with Robinhood. So someone with quite a bit of influence, but nonetheless, person that runs algorithmic trading as well. So, a lot of people might say, if you can't beat them, join them, right? So here we are. And then Bridgewater, run by Ray Dalio. They manage over 100 billion in assets as well. Huge hedge fund. D.E. Shaw, over 50 billion in assets. So you see there's a lot of wealth, a lot of money involved in this industry here. And fun fact about D.E. Shaw, actually, Jeff Bezos, founder of Amazon, actually, I believe worked I think it was his first job out of college, went and worked at D.E. Shaw. And after seeing some of the ways that they were taking advantage of the internet and algorithmic trading, he actually went on, obviously, to start Amazon, and got the idea to start Amazon, and moved on from D.E. Shaw to do so. So pretty interesting. A lot of very interesting, successful people have run through the algorithmic trading industry, and gone on to have tremendous success, whether that's within algorithmic trading or beyond into different industries. So why trade options? As Yolanda mentioned, looking to learning how to invest in options, forex, crypto, a lot of asset classes out there, right? Stocks are another one, very popular. So why trade options specifically? Hamal mentioned just a little bit ago that he's learning how to sell options and hedge with futures, and vice versa. That's the first thing I'm going to touch on here is hedging without the commitment of substantial capital. So what hedging means is hedging is essentially a way to deploy capital to offset some of the risk in a current holding. So for example, you might have a 100 shares of Tesla, and you may not want to sell all those shares immediately because you don't want to take the tax hit, or for any other reason. You just prefer to hang on to those shares. But maybe they have an earnings report coming out, and you're a little worried about that earnings report. Maybe you might say that you might think that for whatever reason the stock might go down on earnings. So a way to hedge that and limit that downside risk would be to buy some put contracts. That way, if the stock goes down, your put contracts will actually be profitable, and then offset some of that downside risk that you would lose if your Tesla shares had gone down. So obviously, with options, you're going to get much more magnified returns, and because of that, you can deploy a pretty little amount of capital and see a pretty dramatic effect on the overall portfolio as a whole. So it allows you to hedge positions without deploying too much capital. Also, another reason you would do so, and another thing that Amal mentioned, is that it gives you the opportunity to sell contracts for extra income on shares held. So if anyone's familiar with selling options contract, essentially what you do is you make an agreement with another trader who purchases your contracts, and if you set that strike to far enough out and that strike price does not get hit, you get to collect all of that premium that you sold, and the trader or investor that you sold those contracts for essentially is at a complete loss. And if it does cross above that strike price, the person who bought those contracts from you are entitled to the equivalent of shares for the contracts that you sold. So you're essentially forced to sell your shares to that trader that you made that agreement with, but you still get to keep that premium. So even if it does cross above the strike price, if it doesn't go too far above that strike price, you can still actually make money if you sold enough premium on that. So really opens up, you'll kind of get the idea that options trading opens up a lot of doors for just different types of strategies. And we'll touch on that again here in a minute. But like I said, it also magnifies the returns on moves of an underlying asset. So for example, to go back to the example of Tesla, if Tesla moves up, let's say 10% in a given day, just with the stock price, if you had bought a call option contract, that call option may have moved up 100% or 200%. So the options contracts, because they are a little more riskier, you do get the ability to magnify some of those gains as well, and far exceed the movement on a percentage basis that you would get from just holding the individual stock. And then again, it also offers strategic alternatives like strangles and straddles. I'm actually gonna show you a demo of I guess just a snippet of code from a strangle strategy to give you an idea of what we'll learn in the full course. But essentially what a strangle is if you are interested in a stock and you believe that stock is going to move very sharply either up or down, but you don't know if that stock is going to move up or down, you can buy what's called a strangle position, where you buy both a put and a call, and potentially profit regardless of the direction that a stock moves. So for those of you who are very familiar with stock trading but not so much options trading, imagine a scenario where a stock moves either up or down, and you profit either way, right? That's pretty exciting. So obviously there's a bit more nuance to that, but that is the core of a strangle. You buy both a put and a call contract, and if it moves far enough in either direction, you can actually profit from that, which is pretty cool. So options give you a lot of strategic alternatives to investing. So if you're in the stock market, gives you strategic alternatives to investing in stocks, and same with futures if you're into trading futures. So now let's get into algorithmic trading with options. So why do we want to trade options using algorithms? You know, we can go in and place trades manually, just with the click of a few buttons. So why would we use that? Why would we use a trading algorithm to trade options? First off, options are complicated. As anyone knows that has gotten into options trading, there's a lot of calculations that get run in the background. A lot of brokers make those for you. But if you want to make any type of analysis on those calculations, doing so with a trading algorithm can do it in a tiny fraction of the time that you can manually do. So to give you an idea of some of these complicated calculations that are made, some examples would be implied volatility. That goes in, and that has a big effect on the price of options contracts and the decay of price of options contracts. Another would be the Greeks of an options contract. So, for example, you'd have delta, beta, gamma, and a bunch of So Amal says Greeks, yes. So he's familiar with it. Perfect. So there's a lot of things that go into it, and so if you want to make any type of analysis on those options calculations, doing so can be quite tedious if you're doing it manually. And then if you want to do so with the trading algorithm, you can do it in a fraction of the time, which is very exciting. So it also gives you the ability to trade when you're away from your computer. So I know it's winter time now. I personally love to ski. So, you know, I might, you know, it might be a Tuesday and I say, shoot, I kind of want to step away from my computer and go up to the mountain and go skiing. So I can actually do so with the trading algorithm. I can leave my computer behind, or I can launch my trading algorithm into a cloud server, so it's not reliant on my personal computer. And my trading algorithm can actually make trades and hopefully profit for me while I'm off doing something else. So maybe you have a full-time job and think it would be hard to sit in front of the computer and do trading all day, right? Just because you don't have the time, you gotta work your job. Trading algorithms are a perfect way to take advantage of trading and the opportunities in trading while you're working your full-time job, or if you're just maybe you've developed a trading algorithm that's consistently profitable for you, and you want to go up to the mountain and do some skiing or snowboarding, or maybe you want to go hang out at the beach, do some surfing, or go play a round of golf while this trading algorithm automates all these trades for you in the process. So it opens the doors for some exciting lifestyle changes if you get to that point where you do develop something that is consistently profitable. So that's really exciting. So Yolanda says, by using an algorithm, you can tell the algorithm where and when to enter/exit a trade. That's exactly right. So what we typically do is we set out a specific set of criteria and rules for the trading algorithm to follow. And what those rules do is they essentially instruct the computer to either buy or sell certain assets. So in this case, we're talking about options. And so what we can do and what we're going to do in the course, so I'll teach you guys to do this. We'll walk through it together and give you the ability to do this on your own. What we can do, which is really exciting, is we can develop some code that tells our broker that we want to buy or sell something. If a stock or options contract or futures contract does something specific. So to give you a very basic example of that, we can code something and say, if a stock moves and crosses above the 10-day moving average, then we want to buy a call contract that is, let's say, $10 out of the money with a 1-week expiration date. And then anytime that stock that we've told the algorithm to trade crosses above that 10-day moving average, it will automatically buy that call contract. And then we say, if the call contract loses 10% of its value, let's exit the trade. And then if it gains 50% of its initial value, then let's also exit the trade. So we can work in some stop loss parameters and some take profit parameters. The possibilities are endless for what you can do and what you can tell and instruct the computer and the trading algorithm to do, which is really exciting. So you can let your mind run wild if you have any trading strategies that you have personally traded and are thinking you want to automate into a trading algorithm. This would be a perfect way for you to gain the skill set to do exactly that. Another reason you'd want to trade options with algorithms is that it allows you to backtest your strategies. So with backtesting is obviously very important if you want to kind of get a gauge for how successful your trading strategy and your set of rules for trading would have been over the course of history. So with a trading algorithm, we can actually backtest over decades of data within a matter of minutes. And if we were to have done that manually, obviously that would take hours, if not days, probably multiple days, especially if we're dealing with intraday data. So that makes this really exciting. Gives you the ability to optimize your strategy and really test everything out before you deploy real money, right? So if you do get into deploying real money with your trading, it's always best to backtest your strategy just to verify that it had at least worked in the past. Because if you backtested your strategy and it only lost money every day, you probably wouldn't want to put your money into that, right? So backtesting gives you the ability to be a little safer with that and take advantage of that technology. Also takes the emotion out of trading. So anybody who has sat in front of the computer and traded all day, it can be stressful if you're trading with your own personal money. You can get a little greedy sometimes. You can get a little fearful sometimes. And just as human beings, that's going to affect our decision making, and oftentimes in a negative way. So obviously a computer, a trading algorithm does not have any emotion. So we can kind of get rid of that emotion that us individual traders as human beings inherently will have. So that's a positive as well. Also gives you the ability to trade several strategies at a time. So again, as human beings, we only have 10 fingers, 2 hands. We can only click so many buttons at a time, and we only have 2 eyes, so we can only watch so many charts at a time. So with trading algorithms, it gives you the ability to trade multiple strategies at a time. Is essentially the number is limitless in terms of the number of strategies that you have the ability to trade at a time with trading algorithms. And so that makes it really exciting and kind of opens the door again for some different opportunities that you otherwise would not have if you were just trading as an individual. And then lastly is fast execution. And of course, there's more benefits, but these are just probably the main ones that we've thought about. Fast execution. So I mentioned before, I think it was Yolanda that mentioned that they know C++. C++ is great for high frequency trading. Algorithms, trading algorithms are great for exactly that and fast execution. Obviously, a computer can execute something and analyze data much faster than us human beings can. So that again opens up more opportunities in the market for you to trade with. So I'm going to give you guys a couple of quick demos here. First off is just going to be a simple call buying strategy. There's no real rhyme or reason behind the strategy. Essentially, all I did was I put together some code that interfaces with interactive brokers. And essentially what it's going to do is every, I think, 5 or 10 seconds, it's going to buy a call contract for, I believe, Apple. So this will give you an idea and just show you how we can write some code to trigger trades within a brokerage like Interactive Brokers. So I'm going to show you that. I'll give you a quick video on that. And then I'm also going to show you a code snippet of something that is a little more complex. I mentioned strategy that is called the strangle strategy earlier, where you buy both a call and a put, and you can profit from the underlying asset moving sharply enough in either direction, right? So I'll show you a code snippet of that. This is something that we're going to go through in the course in more detail. And we have some code that we'll walk through together and give you guys in the main course so that you guys can learn that and have that as an example to go through. So again, that strangle strategy, I'll just show you a code snippet of it just to kind of give you an idea of something that's a little more complex and where we'll get to through the course. So first off is the simple call buying strategy. This is all developed in a Python library that's developed by LumiWealth. It's all open source and it's called LumiBot. So we've developed a lot of trading algorithms in here. It's a great tool that we use with Python, and we can interface to trade specifically for options with interactive brokers in their trader workstation platform. So this is an idea of essentially the code that we'll write and we'll learn how to write in the course. And this is, again, essentially a set of instructions to tell and give to our broker. So I'm going to show you this actually running, and recorded this a little while ago while the market was open, obviously. But what I'm going to do is I'm going to play a video here. On the left side is our code. This is our trading algorithm. So what I'm going to do is I'm going to play the video, and in the video I'm going to hit run and begin running our trading algorithm. And then on the right side, if anyone is familiar with Trader Workstation from Interactive Brokers, you'll recognize this window here. And in this, focus your attention in this bottom window here. Essentially what's going to happen is we're going to begin placing orders for Apple and specifically a call contract with Apple. So I'm going to go ahead and play the video, and you can see this trading algorithm running in real time. So on the left-hand side, again, is that trading algorithm. And then on the right-hand side, you'll begin to see some new orders. So you can see order filled. Should happen again here. There we go. There's another one. I'm not sure if you guys can hear the gentleman telling us that the order is filled with the British accent, but that is essentially confirmation of that. And so there's that. So essentially, like I said, there's no rhyme or reason behind it. It's not a strategy to trade, but it's just an example of instructing the trading algorithm to buy a call contract for Apple every 5 seconds or so. And you can see that actually triggering within the brokerage for interactive brokers in Trader Workstation here. Cortez asks, does it work on Tastyworks brokerage too? I like their margins more than interactive brokers. Great question. So I don't believe LumiBot has a interface with Tastyworks yet. Let me look real quick. I don't believe I could be wrong. Let me double check that Tastyworks actually has an API. Let's see. Tastyworks API. Yeah, so it looks like they don't have one. It looks like they have an unofficial API that was probably developed by some algo trading developers, but it similarly to Robinhood. I've been asked a lot if Robinhood has a trading API. They have kind of a workaround, but it's actually against their terms of service to trade algorithmically with Robinhood. People again have created a workaround, but it looks like Tastyworks is about in that same boat. So it doesn't look like, just from the couple seconds that I researched this, that they do have a trading API to write trading algorithms with. So LumiBot does not interface with Tastyworks, unfortunately. I hope Tastyworks releases an API so that we can develop that for LumiBot. But as of right now, we don't have connectivity to Tastyworks, unfortunately. Interactive Brokers is a broker that just offers a lot more support for algorithmic trading. So that's typically what we use, especially for options trading with LumiBot here. And that'll be the examples that I go through again. So that is the just a demo of call buying every 5 seconds or so. Again, no specific strategy behind it, but just to give you an idea of how we can write instructions in a trading algorithm to instruct our computer or a different cloud server to place trades for us. So whether I was sitting at my computer or not, it still would have executed all of that, which is pretty exciting. So moving on to the strangle strategy. I'm not sure how well you guys can see this code, but this should just give you an idea, and just as a code snippet, just an example of some of the code that we will learn how to write, and strategies that we'll learn how to develop within the full course. So that is that. And yeah, so I guess I won't go into too much depth and detail with this because I could probably end up spending too much time going through everything. But this should just show you something that is possible, developing a strangle strategy like we discussed a little bit ago. And yeah, so let's get into the course. I want to give you guys a rundown of the course, everything that you'll learn within the course. Everything we'll go through, some of the tools and offers that we'll leave you with. So I'm going to go ahead and share this. Just give me one moment to open this up. Can you just go ahead and pull this? So let's go to the window and do. And show that. Perfect. And actually, let's do this. Don't want webinar inception here. Give me 1 second. Here we go. Okay. So the full course, options trading course plan. So we have a few different options that we will get into, but this is kind of a reiteration of what we went through. So we're going to cover the fundamentals of options trading in more depth than we did here today. We're going to go through backtesting options strategies. So we're going to learn how to use historical data to test how different strategies work and would have performed. We're going to kind of demonstrate how to build a robot that trades options and work through doing so. So course curriculum is going to be broken into 3 parts. First will be options fundamentals. So you'll learn how to do so, how to trade options and the fundamentals of that. Cortez asks, is there a monthly fee to do this on Interactive Brokers? So the answer is yes. The fee specifically is for access to their data. It's not much more than $20 a month, if I remember correctly. So it's not too difficult to capture. But yes, there is a fee with Interactive Brokers related to their data specifically. There are some ways around that, but I typically recommend just using Interactive Brokers data. So first part of the course is going to be course introduction. We're going to get acquainted with each other, familiarize ourselves with everybody who's in the course, be able to introduce everyone to each other. I think it'll be a great way for everyone to connect with other people who are also in the same camp, where we're all learning how to trade options and doing so algorithmically, learning how to code. There will probably be a slight range of expertise levels, But nonetheless, I think it'll be a great way to connect with everybody. And so we'll do that week one. We'll go through the course layout, and we're going to help everybody get the technology set up on your computer so that we can get started developing these trading algorithms. So some of you that are very familiar with coding already will probably have like VS Code set up, Python set up on their computer, and whatnot. But we're just going to make sure that everyone is set up properly on their own systems to be able to successfully go through the course. Week two, we're going to go through options fundamentals. We're going to talk about the difference between call and put options, profit and payoff, and go through some more of fundamentals, pricing that goes into call and put options, so that everyone is on the same page there. And then we will leave time for a Q&A so that everyone is on the same page and make sure that we are getting through everything that we need to. Week three, we're gonna cover options trading basics. We're gonna talk about typical strategies, begin talking about strategies like the strangle strategy that we talked about. I believe it was Samal who mentioned that they are wanting to learn how to sell options. So we're going to do just that in talking about covered calls, which is perfect for you. We're going to talk about Greeks, talk about how Greeks work, how those play a part. I know Amal mentioned that. I'm familiar with that. And again, leave the Q&A. Part two, we're going to get into back testing and automating the trading. So we're going to begin with options, live trading, and paper trading. We're gonna help everybody make an account, link the account to the broker, and then verify accuracy of the trading algorithms that we begin with, and also use a simple example strategy. So we have some code that we've actually already developed that's quite valuable actually, and has taken quite a lot of time to develop. And we're going to actually pass that code off to you guys so that you guys have some example strategies to work with. Maybe those strategies are actually something that you want to use in your trading or just build off of and refer back to. Then week five, we're going to talk about options backtesting and go through options backtesting. So we're going to work through getting data to backtest, and then set up that data for backtesting. And then again, go through an example strategy so that we can all get an idea of how backtesting works. Then again, we'll go through a Q&A, make sure we're all on the same page, everyone's done exactly what they need. So week six will be the commencement of part three. We're going to go over some more example strategies, do some workshops so that you guys can actually develop your own strategies, and then also talk about futures trading. I know there's some people in here who I mentioned that they're more so into futures trading. So we're going to talk about futures contracts and trading options for those futures contracts, which is great. So talk about the example strategies, do that for a couple weeks, and again, go through workshops so that you guys can do some development yourself and continue to develop that skill set, and also present some of the work that you've learned how to do and are developing. And then again, week 8 is futures trading. So it's an 8-week course. Again, we're going to be covering a lot, from live trading to back testing to developing your own strategies and then getting into futures. So really going to cover quite a bit in those 8 weeks, and should be great. So we have 3 different plans here. First of which is a self-directed plan. It's a collection of instructional videos, sample code that will allow you to work at your own pace. It is your own video library of constantly expanding, have lifetime access to those videos. So you will not have access to any direct collaboration with other people in the course or myself. Typically what we start with is the live classes. So our experienced instructor, which is myself in this case, will host live classes at pre-established times. It's going to be once a week that we do these courses for 2 hours each. And then it will allow you to interact with other students and the instructor. You also get a chance to work with other students, fostering collaboration and discussion. So this will be a lot of fun. Like I said, it'll be a lot of people who are kind of in the same boat, where we are just all learning together how to develop trading algorithms for options. So that'll be great. And then the last tier is going to be the project help and tutoring plan. So if you feel like you might need a little more help or a little more guidance, or even just want some development work from our team to kind of get a head start on everything, this involves our experienced instructors, which is myself, meeting with you through video conference on a set schedule to make sure you're understanding the concepts and help with building your custom portfolio project. So this is in addition to this tier, the live classes plan. So you get access to the live classes that we're going to be doing, and then this will give you some additional one-on-one time with myself if you feel like maybe there's something specific you want to go into more detail with and want some help discussing and learning. Or if you have a trading strategy that you are looking to personally develop, that's something that we can assist with as well. So these are the courses broken down. Again, that first tier is going to be the self-directed course. The second tier is going to be the live classes. And the last tier is going to be the project help and tutoring classes. And again, this last tier includes the live classes that we go through. And I just want to provide a little more clarity on the last tier as well. This includes 10 hours in total of one-on-one time with myself or another one of our experts. So you can decide how you want to structure that. A lot of people in our previous courses have chosen to take that 10 hours and asked us to develop a simple trading strategy for them. Some other people that want a little more help with the course have elected to use some of that time as one-on-one tutoring services and so on and so forth. So that is the breakdown of those courses. Feel free to ask any questions that you might have about the courses in the chat here. This should give you kind of a good idea of what you'll be getting with the course, and also, like we discussed, everything that we're going to be going over in the course, which should be really quite exciting. And I know I'm definitely looking forward to sharing my knowledge and expertise that I've learned over the years of algorithmic trading and the work that I've done with all of you and helping you gain that skill set for all of this. So that is that. I'm going to go ahead and navigate back to our presentation here. Perfect. Oh, I actually forgot to go over course start dates. So let me cover that real quick. So the course start dates, and let me actually just share this to make it a little easier. So we're going to be beginning this, and I touched on this super briefly at the beginning of the call, but just to reiterate, we're going to be getting the course on February 22nd. The last date for you guys to register for the courses is February 15th. So again, it's going to be 8 weeks in total. It's going to be 8 to 12 hours per week, self-paced learning. Class schedule is going to be every Wednesday at 8 p.m. Eastern time. And the lecture duration is going to be 2 hours per week live over Zoom. So yes, that is going to be the time frame that we deliver all this to and kind of commence over, which is going to be great. So again, coming up here in about just a little over a month. So I'm definitely excited to begin teaching this course with all of you guys and jumping into that. So that is that. And so that will essentially end everything that I have for you guys. I just want to give you guys a little bit of time here to ask any questions, any additional questions that you might have. If you have a question about the course, anything that we're going to be going through, with the course, or maybe anything that maybe has come to mind that you want to ask about what you'll be getting in one of the packages for the course, feel free to let me know and ask away. So I'll just give you guys a few moments here to send out any last questions that you might have, and we will wrap up from there. And again, I appreciate everyone who's been in here for the duration of the call. Appreciate everyone staying in here and hearing everything that I had to say. I hope that everything was informative as we've covered everything. I hope that you guys have learned something from me in this process. If you have any feedback as well, in addition to questions, definitely let me know if there's anything in particular that you are wanting to get out of the course specifically. Now would be the time to bring it up prior to launching the course. I always want to be able to cater what we're delivering and teaching to what you guys are looking for. So, like I said, we still have a little over a month here before the course begins. So it's coming up quick, very quickly. So, definitely looking forward to that. And, if you have anything you want to cover, let me know. We might be able to structure something around, taking care of some of the things that you guys feel would be very specific to what you want to learn in your own trading, investing, and your process with algorithmic trading. So, please feel free to share that feedback if you'd like, and ask any questions before you part ways. And again, just appreciate everyone for hopping in here, jumping on the call. Hope you gained some value from this. And Cortez asked, will it work on ThinkorSwim? So we do not have compatibility on LumiBot with ThinkorSwim quite yet. I've personally done quite a bit of work with TD Ameritrade's API. TD Ameritrade's API, unfortunately, is pretty unreliable. Myself, along with a lot of algorithmic developers who have developed trading algorithms for TD Ameritrade in their API system, have run into a lot of issues in terms of reliability of their API system. So tend to kind of steer away from TD Ameritrade when it comes to algorithmic trading. They do have a specific API, but it just is not kept up quite as well as Interactive Brokers is. So that's why we haven't implemented it yet. If anybody had a very, very specific and demanding use case, we'd be happy to discuss that. But again, I just wouldn't recommend using TD Ameritrade for algorithmic trading. Yolanda says, I'm also interested in learning how algorithms are used in analyzing data trends. Perfect. Awesome. So yeah, I mean, just about any trading algorithm will analyze data at some point. We can, depending on how in depth you want to get with that, I think we'll leave you in this course some really solid foundation on how to analyze that data in Python, because just about, like I said, pretty much every trading algorithm has to base their trades off of something. So, in this case, it would be some type of data analysis. So yeah, that's perfect that you're looking to learn that. This would be great. And then Yolanda also added, for example, how a specific option is performing within the market. Will the investor lose money or earn profit in the long run? Yeah, great question. So the point where you say, will investor lose money or earn profit in the long run? I think that's where backtesting best comes into play. Depending on how far back in options or I guess the underlying asset of an options contract dates back, um, you can backtest it over that period of time. So it might be 10 years or so. If you're trading intraday, you might say that 10 years of intraday trading would be sufficient data for you to know if some trading strategy is profitable or not. And so as you get into backtesting, that'll be a perfect way for you to gauge if something has been profitable or not, and give you a good idea on if it would make sense to put some real money into it. Cortez asks, is it easy to transfer indicators from ThinkorSwim to interactive brokers? So within LumiBot, regardless of the brokerage that you use, the indicator calculation will actually be the same, and all of the code actually will be the same if you transfer between ThinkorSwim or interactive brokers. Like I said, at this point in time, we do not have compatibility with TD Ameritrade and ThinkorSwim. But if we were to add that, essentially your code would stay the same between interactive brokers and ThinkorSwim, and that's a great benefit to LumiBot, is that you can pretty much transfer between different brokerages and keep the same code. Yolanda says, okay, cool. I'm looking forward to learning this. Fantastic. I'm looking forward to teaching it. I think it'll be a lot of fun, very informative. I think the skill set in general is just super, super valuable. Depending on, regardless of how much investing and development experience and programming experience you have, learning how to develop these trading algorithms is so valuable for a number of different ways. Obviously, most immediately would be for your personal investing and trading, and being able to potentially produce better returns than just sticking your money in something like an index fund and letting it ride longer term. Right, you can really get a leg up on people from an investment standpoint by learning how to do this, which is awesome. Okay, so I will leave it at that. Again, I really appreciate everyone for hanging in here and hearing what I have to say. Again, I hope that you guys found this to be pretty informative and learned something. And again, if you did find this informative, this is going to really, this course in total will really be quite valuable. And Amal says, do you guys cover risk management? Yeah, so that will be a theme throughout. I mentioned, if we can see if we can go back here. So if we navigate back, just 1 second. I'm going to pull that up. There we go. So as part of the course, we're going to be going over a number of different strategies. With options trading, a lot of strategies are meant for risk management, actually. So let's go back here. So we're going to go over typical strategies like collar, straddle, strangle, covered calls. A lot of these can be used as risk management, and I'm happy to also cover that in a little more detail myself. Options are something that I personally use for risk management fairly often with my trading. So I'm happy to share, how I do so and some of the strategies that I use to cover risk management. But I know you mentioned you trade futures oftentimes. So yeah, that's definitely something that will remain a theme throughout this course, is how to utilize options, and we'll go over different strategies with options trading algorithmically that you can use for risk management. So we'll definitely cover that. So yeah, again, like I said, I appreciate everyone taking the time, hanging in here, and I hope everyone found value with it. Again, if you did find value in this, we will certainly be going into much more detail, a lot more depth, and we will be leaving you guys with a lot of great and valuable tools when the full course comes around. So hope to see you guys in the course. Feel free to reach out to us if you have any questions beyond this call. Again, Discord is a great way to find us and get a hold of us. And looking forward to seeing some of you guys in the course come late February, the 22nd. So again, I'm looking forward to sharing all the information I have with you guys and teaching this with you guys and engaging more in this process. So again, hope everyone has had a great beginning to the new year. I hope that if you have, that continues. Hope everyone's having a lot of success in the beginning of the year, and hope to again see you guys in the course here in February. So everyone have a great rest of your evening. Have a great night, and hope to be in contact with you guys soon. Take care.